From FXEmpire, this is Chris, and I'm looking at the euro dollar. You can see we have rallied off of the lows heading into the Fed, but let's be honest here. We're really not doing anything. We're just kind of killing time. So this is the type of trade that takes a bit of experience. Trading is just simply a matter of odds, playing odds in your favor. A lot of people say that it's like gambling, and a lot of traders get angry, but it is a lot like gambling in the sense that you need to realize when to step on the gas and when to be very patient. And this is one of those times where you want to be patient. What you're hoping for is to see a little bit of a pop after the announcement, maybe a knee-jerk reaction to the 25 bips basis cut that the Fed is pretty much priced in to do. There could be about, maybe retail traders come in and try to push it up to about the 50-day EMA. Or, if you're really lucky, they'll push it to here at about 112. Then you look for signs of exhaustion. You look for the market to run out of steam, and you start selling again. The longer-term trend would need a lot to actually change it. It's not going to come to this one announcement. It's not going to be the next 30 pips, despite what some people may try to tell you. This market, you always need to look at the chart like this. There's your weekly chart going into this. Yes, there is some support below, but the reality is we've been in a downtrend, for 2.5 years now. That will be very unlikely to happen today. And quite frankly, my strategy is I'm going to see if we fail here. And if we fail, and we start to roll over, I'll sell again, expecting to test the lows, or at the very least 110. And then I would sell a failure at 112. So let's say that we don't get both of those. 113.5, the 200-day EMA. There is a lot for the market to chew through. So don't get sucked into a 40 pip move to the upside and then wonder why you lost. You always need to look at the longer term charts. And this is a perfect example of how the longer term comes into play.